Hello everyone, how's it going? In this video, we will talk about Tesla trading under the ticker symbol TSLA. Tesla has emerged as a very compelling choice for retail traders seeking substantial profit in the dynamic world of stock investment. Many factors have contributed to the allure of Tesla as a very suitable stock for those eyeing significant returns. Over the years, Tesla has positioned itself at the forefront of the EV revolution. As the automobile industry has been undergoing a profound shift towards sustainability, Tesla's innovative approach to the EVs has allowed it to become a leader in the sector. The company's electric cars have won widespread acclaim for their performance, range, and cutting edge technologies. With a global emphasis on reducing carbon footprint, Tesla stands to benefit from the increasing demand for clean and energy efficient transportation solution. Another aspect to consider is its CEO, Elon Musk. Widely regarded as one of the most visionary and dynamic leaders in today's business world, Musk's ambitious goals, such as achieving mass market adoption of electric vehicles and disrupting traditional transportation models, have captivated investors. His strategic decisions and charismatic leadership have contributed to Tesla's ability to secure strong market positions, fostering confidence amongst retail investors looking for a company with visionary leaders at the helm. The expansion of Tesla beyond the EVs is another factor that makes this company an intriguing investment option. It diversified into offerings that include energy products, such as solar panels and energy storage. The growing global interest in renewable energy sources positions Tesla to tap into a broader market and revenue streams beyond the automotive sector. This diversification not only enhanced Tesla's resilience but also provides investors with exposure to multiple high potential industries. The development of self-driving technology, advancements in battery technology, and ongoing improvements to vehicle software contribute to Tesla's reputation as a leader in automotive innovation. For retail investors seeking big profits, being associated with a company at the forefront of technological breakthroughs can be a strategic investment choice. Financial performance is another critical aspect that makes Tesla an attractive option for retail investors. While the stock has experienced volatility, reflecting the inherent risks of investing in growth-oriented companies, Tesla stock has shown remarkable appreciation over the years. The company's ability to deliver strong revenue growth, particularly in the context of global push towards sustainable practices, underscores its potential for substantial returns. The expanding global market for electric vehicles further supports the case for Tesla as a lucrative investment. Governments worldwide are increasingly incentivizing the adoption of electric vehicles through subsidies and regulations, favoring sustainable transportation. Tesla's early and dominant presence in this market positions itself to capitalize on those trends, potentially leading to increased market share and profitability. We should also consider and appreciate the brand strength and customer loyalty that Tesla has cultivated. The Tesla brand is synonymous with innovation, cutting-edge technology, and a commitment to sustainability. As consumers have become more environmentally conscious and technologically savvy, Tesla's brand appeal is likely to translate into continued strong demand for its products. Before the video continues, if you would like to see more stock analysis videos like this one, please remember to like, comment, and to subscribe to my channel. So, recently, the shares of Tesla has seen a 7% decrease over the past 5 days, 14% decrease over the past month, and a significant 25% decrease over the past 6 months. Despite this decline, the overall trend in the medium term appears sideways, with previous support levels around the $200 region being tested twice. The current talks about the Tesla include a reimagining of its compensation package and advanced negotiations to to enter into the Indian market. Both pieces of news carry potential market implications but also raise questions about their roles in steering attention away from other aspects. The timing of those announcements do raise some eyebrows. While the reimagining of the compensation package and Tesla's entry into the Indian market are undoubtedly significant events, they may also serve as strategic maneuvers to shape the news cycle and divert attention from other critical aspects. For instance, Tesla's exposures in various markets and the shifting landscape of the EV market could be influencing its recent downtrend. The concept of an EV winter gaining traction may be impacting Tesla's market performance. It's crucial to look beyond the headlines and consider the broader market dynamics that could be contributing to Tesla's trajectory. Another one that may demand attention is reputation risk. Elon Musk, so the company's CEO, is known for ventures beyond the EV car realm. News headlines and EV's other business pursuits may carry potential to influence Tesla's own brand image. For long-term investors, this is a significant consideration. Elon Musk, with his unconventional approach and ventures like SpaceX, X, so formerly known as Twitter, Neuralink, and so on, is not a conventional CEO. So understanding his influence on Tesla's brand and the potential impact on long-term investments is also vital for shareholders. For those who see Tesla as an investment, it's also crucial to assess the true intentions behind buying Tesla stock. In other words, your actual intentions when you want to buy Tesla. If the aim is to capitalize on the short-term volatilities, the market might be entering consolidation phase, offering fewer opportunities and narrower margins. For those who want to hold Tesla shares for the long-term, awareness of the continued relevance of the EV sector will become paramount. Overall, Tesla's recent price action and the surrounding news paint a complex picture. As investors, it's essential to navigate beyond the surface, consider the broader market trends, the potential strategic maneuvers, and the influential figure of Elon Musk. So, with that being said, here are the technicals. The recent volume has been around 123 million shares versus the average volume of 109 million shares. Over the previous 52 weeks period, the price fluctuated between $115.60 and $299.29. The volume of shares traded tells us how many shares are being bought and sold at any given point in time, and if there's enough liquidity to support a trading strategy. If the float is thin, it's going to be easy to push the stock price around, but low liquidity could also mean that the exit will be challenging. When we compare the current volume against the average volume, trend reversal and breakthroughs are possible phenomena that we can see. And in both cases, the current volume would differ significantly from the average volume. The market cap of Tesla is currently at around $700 billion. As we compare the current price to historical price fluctuations, the stock is 1% higher than the 1-month low, 13% higher than the 3-month low, and 90% higher than the 52 weeks low. On the options market, which often gives us a hint about the market sentiment on where the stock price could go next, the implied volatility here is 49%, compared to a historical volatility of 33%. The put-call volume ratio is currently around 97%. Keep in mind that for many investors, they systematically hedge their long positions with put options. So, with that being said, the most recent volume of options traded is around 3.2 million contracts a day versus the 30-day average of 2.2 millions. For open interest, the most recent volume of open interest is 8.7 million contracts, compared to the 30-day average of around 8.3 million contracts. As for the shareholder structure, institutionals hold about 48% of the outstanding shares. The biggest shareholders include Vanguard, BlackRock, and State Street. So, the current short interest is about 3% of the total float, 62% of which from the dark pools. If the short interest is above 15%, usually this means that there could be arguments about short squeezes. It's not the case at the moment for Tesla. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all this, My view on Tesla is that the stock will maintain its relevance as long as the EV sector is a promising one to put money in. Tesla's potentials have largely benefited investors over the past few years and may have limited upward room to further grow its market cap. I would recommend to wait a bit to see if there are any price corrections in the month and years to come before committing large chunks of your capital in Tesla. Overall, if you want to buy in Tesla, the overall exposure should be between 5 to 8% maximum, and to split the allocation in batches of 10 to 20% at a time over the next few months so that you can profit from retracements.